Good evening. The near collapse of Equitable Life brought home to millions of policyholders what happens when an insurer can't make good on its promises. And whilst it doesn't attract as much attention as banking regulation, insurance regulation is vital to the economy's smooth running. Well, the man in charge of that is Sam Woods, Deputy Governor of the Bank of England and Chief Executive of the Prudential Regulatory Authority. He joins me now for his first broadcast interview. Sam, great to see you. Thank you for joining me. Now, while everyone knows that the bank oversees and supervises the banking sector, fewer people may necessarily know that you oversee insurance. Why is it so important?
So Ian, this is a huge sector here in the UK, 2.4 trillion in assets, which, to give your viewers a sense, is bigger than GDP. And today we're announcing a series of reforms to the way that we regulate that sector, which basically are about cutting bureaucracy, making life a bit easier for the smaller firms. But this is no bonfire of the regulation. And the reason for that is, directly to your question, that huge numbers of people depend on this industry. In one example is 27 million people in this country have a motor insurance policy. Another is 6 million people are relying on these companies to pay their pensions at the moment. So while we are going to make the regulation more efficient, we're not going to go soft and put those people at risk.
Now, insurance is one of those sectors in which Britain punches above its weight globally. How do you balance the need to retain that whilst being fairly tough with the insurance companies?
Well, the first thing to say is that, in my opinion, the insurance industry in this country is alive and well. And the best evidence for that is that returns are healthy at 9% return on equity for the major insurers. The insurance sector has grown by 10% over the last couple of years. So I think there's absolutely no evidence to suggest that the weight of our regulation is somehow impeding the competitiveness of the UK insurance sector. But one thing we do have to have an eye to, of course, is smaller firms, and that we're being proportionate in terms of how we apply our regulation to them. And one of the things we've said today is that we will cut the reporting burden on those firms by up to half.
That may mean, though, that insurance, some lines may be less aggressively regulated than they were previously?
I wouldn't say any of our regulation is aggressive, but it is all meant to be robust, and the reason for that is that people depend on these services in a very vital way. And I've spent quite a lot of time with policyholders over the last few months to remind myself of that, and when you talk to people about what they rely on insurance companies to do, you realise it's very important. They're there to make good when things go wrong.
And I mean, you've touched on this in the past in some of your speeches. You've seen some really quite emotional cases at times of where insurance companies have done the right thing, but they could only do that because they were being properly supervised.
Yes, well, when you hear these cases, particularly when people have a critical illness or in some kind of terrible accident, and you realise, the kind of emotional value of what insurance companies are doing in those situations, you realise it's very important that we pay attention to our job, which simply put is to make sure that insurance companies have got enough money to pay out when things go wrong.
And of course, all being the case, that is hopefully that'll be the way it continues. Now, what about competition in the sector? This is something that the Treasury Select Committee has been looking at. They would like to see you encouraging competition more. What's your response to that? I mean, is competition losing out right now?
Well, so I don't think so. And there are many points of agreement between us and the Treasury Select Committee, and I think it's a great thing that Nicky Morgan and that committee have decided to look at this point of regulation, which, as you say, often goes much less noticed than banking. But there is a slight difference of view about whether we should make the competition a primary objective of the Prudential Regulation Authority. And I'm not very enthusiastic about that for two reasons. One is, to be honest, the most important contribution we can make to competition is as a referee. So setting the rules for everyone so that unscrupulous firms can't come in and undercut the well-managed firms. That's our core job. And secondly, the benefit of focus. I think the lesson of the financial crisis in this country is if you've got a regulator with 10 objectives, they probably won't do any of them very well.
Worth pointing out, though, I guess, that if you look at things like motor insurance, premiums have been coming down very sharply in recent years, suggests that there isn't an awful lot wrong with competition.
Well, I think there's been a pretty ferocious competition in that market in particular, and that's been including through players coming in from outside the UK. And it's true that we generally don't think there's a major competition problem in insurance markets. Another way to look at that is we've authorised 26 new insurers over the last 4 years. It seems to me that's a reasonably healthy rate.
Now, what about Solvency II? Now, this is the pan-European, EU-wide insurance regulation directive. What happens post-Brexit? Will that stay in place for British insurers?
Well, Ian, that is a very good question to which none of us currently know the answer, and it will depend, of course, on what kind of a deal the government wants to strike, and we're looking forward to what the Prime Minister says on Friday. The one point I would make, though, is that it's been an enormous effort to bring in this new regulation. We're now in the process of tidying it up But I think if you ask the insurance companies, do they want to embark on another completely new regulatory journey at this point, most of them would say no.
Right, all right. Well, amen to that. I'm sure if any insurers are watching. Sam Woods, great to see you. Thank you
Thank you very much.